Welcome to Microcap Explosions. This is Mariusz Skonieczny. This is video number 7 in the Voxtur video series. In this video, I'm discussing risks and issues. Okay, so when I first released this idea more than a year ago on Microcap Explosions, it was literally like a battle, okay? Like a war between members arguing with each other about whether it was a good investment or whether it was not a good investment. So I know what kind of reactions this idea can generate from people. And so I think it was a good idea for me to make this separate video talking about the risks and issues, because you see, some people have misconception about investing in early stage companies that are becoming big, because they look at them and then they want them to look, they want the financials, they want everything to look just as if the company was stable and mature, okay? And so in other words, they want huge returns, life-changing returns without any issues, without any risks, without any hair, okay? And I always say, get a little reality check here. You're not going to get life-changing returns and everything looks perfect. You're just not going to. The same thing when you're buying a house. If you want a house to be beautiful looking, ready, landscaping is beautiful, walls are beautiful, everything is beautiful, you're going to pay a beautiful price. But if you want returns, then you might have to buy the beat-up house that, doesn't have the best landscaping. Maybe, the one of the windows is broken, right? But you look at this and you're like, okay, I can handle this. I can look past some of the issues and maybe understand the risks better. But you're doing this because you want to get better returns. You don't want to pay beautiful prices. Okay, so let's look at some issues, concerns that I've encountered on this stock in the past, and I can, just kind of walk you through my thoughts about those. Now, you don't have to agree with them. It's up to you, but I'm just going to go on and go with it and see what happens. TSXV, Toronto Stock Exchange Venture. Voxtur is currently trading on Toronto Stock Exchange Venture under the ticker symbol of VXTR, and it's also trading on OTC under the ticker symbol of VXTRF. For some people, this is a red flag. If you ask, financial advisors, brokers, oh, no, you cannot go to those exchanges. They are, venture, risky, toxic, OTC. Oh my God, definitely not OTC, okay? So that's the first thing that people encounter is like, well, I don't want to go there. I might not have access to this exchange. My broker is telling me it's risky, la, 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 la. Okay, from my point of view, this is exactly why I want to be there. This is exactly where I want to buy my companies. Why? Because, as I said before, TSX Venture is a place that good technology companies are not appreciated. And the management doesn't like that the stock is trading on TSX Venture. That's why they want to move to NASDAQ. And I'm happy to hear that they want to move to NASDAQ. But I want to have my full position before they move to NASDAQ. Because I know when they are on NASDAQ, the company is going to be appreciated. When they're on TSXV or OTC market, no, it's not going to get appreciated. Because what do investors care about when they are on TSXV? Marijuana, crypto mining, life science companies, gold and silver, everything that is non-technology, right? So I always joke about people on TSXV are getting high on pot and they're looking for gold, All right, probably the best thing that Voxtur could do is offer a joint to an appraisers every time they finish an appraisal to get high, and I think the stock would be 5 times as much. That's the reality on TSXV. But even on OTC markets, if you look at a company called with the ticker symbol MILC, Millennium Investment Corporation, I've been following it for a while. They had this carbon producing facility in Hawaii, and then they had an investment in like an Indian brokerage company. So the assets, when I looked at it, the stock was trading at like 25 cents. The assets just of the Indian company were like three times of what the stock was trading for. And then there was this, potential that the carbon producing facility was going to create like multiple times what the stock was trading for or what the market cap was. Did anybody care? No, nobody gave a freaking shit about Millennium Investment Corporation, even though on the investor presentations, it was clearly that the assets were more than the market cap. And then the stock went from 25 cents to $8. Why? Because they told the world they were going to produce pot. That's all it took. We're producing pot? Yep, now you're worth $8. Smoking pot? Yep, we can relate to that. But technology that's revolutionizing appraising, title, and tax assessment? No. We're not appreciated here. So from my point of view, I love buying companies on TSXV and OTC simply for the fact that the financial industry hates these exchanges. They think they're risky. I have very little competition. So I want to buy them before they go on NASDAQ. So for me, that's a positive, but for others, it might be negative. No profits. At this point, as I said before, Voxtur is a company that was put together through various strategic acquisitions of technologies, master service agreements in these areas of appraising, title, a tax assessment, and also the foreclosure technology. Now, during the early stages of companies' development, you can't expect those companies to show big profits. I mean, look at some of the comparables that I showed you that are growing fast. They have huge multiples to revenues. They are worth billions of dollars. Are they profitable? No, because growth-oriented investors, they know that at some point, because of the growth, they're going to be profitable. And somebody just looking at Voxtur's last 9 months of financials, they will look at the bottom line and say, oh, the company lost so much money, which is true. However, if you listen to the most recent conference call, you'll know that the company is expecting to be profitable in the fourth quarter and definitely in 2022. So as the revenue ramps up, the revenue is going to cover more than enough of expenses, and you're going to see a nice bottom line. But when you're just looking backwards and you're like, oh, I'm going to stay away because the company is unprofitable based on the past financials, you're not really analyzing it properly, because when the companies are joining together or merging, you have some costs related to the old technology, the old general and administrative. The technologies haven't been integrated together. And then also, as the company is improving its product, that's investment, that costs money, that they're investing the money and they're sacrificing the profitability for the future. Also, as they are signing up new clients, they are investing, integrating, solving problems for those clients, and upfront, it looks like the expenses are artificially high, but for the future, they're going to look much, much better. So you can't really expect for companies that are just putting things together and exploding and revolutionizing its space to be maturely profitable the same way the mature companies are. Voxtur has no organic growth. I've heard this from some people. Oh yes, we see nice growth from quarter to quarter, and as you know, From Q1 to Q2, they grew revenue 28%. From Q2 to Q3, they grew it at 37%. And based on the hints that Gary provided on the conference call, it looks like the growth from Q3 to Q4 is going to be about 60%. And so, but, some people are like, okay, yes, they're showing growth, but most of the growth is through acquisitions. And that is completely missing the point. It's not true at all. Because if you take a look at the acquisition that they did with Apex didn't have that many revenues. Only after Voxtur acquired it and integrated it with the technology and other improvements, only then the acquisition of Apex started to grow significantly. The same thing happened with Anow, the appraisal platform. When Anow was acquired, yes, it was growing. But after it was acquired by Voxtur and put together with its other technology, put together with the master service agreements, and also with Jim and Gary's connections to the lending industry, only then Anow was able to lend the biggest wholesale client, UWM. Without coming on board and merging with Voxtur, Anow would have never had a chance, zero chance, lending a client of UWM. And now Anow's business is literally exploding because it's part of the Voxtur family. So to say that the company is growing through acquisitions is simply not the right way of understanding it. Yes, it's growing through acquisitions, but there's a lot of organic growth, and you might not easily be able to see it, but that's really what's happening, because that's the idea behind the acquisition strategy, is to put these together that are synergistic and they help each other grow. That's the whole idea. And now going forward, most of the biggest acquisitions are pretty much done. The company now is ready to expand, and going forward, you will really literally see exponential organic growth with a little bit of acquisition growth. Margins are decreasing. So from Q2 to Q3, the gross margins declined from 46% to about 36%. And this, of course, worried some people. And now you can look at it and say, oh, I don't want to invest in it. Something is wrong because the margins are decreasing. You have to understand why they are decreasing. And that's because of the Zoom acquisition. When you acquire other companies that have, lower margins, and you're in the process of transitioning from one technology to another, you're going to have those kinds of impacts on gross margins. But from the most recent conference call, we can see that the margins going forward are going to be growing exponentially, because the individual businesses like the Anow foreclosure business or the tax assessment business, those businesses alone have margins close to 80%. So as the company continues to integrate its technologies, the margins are going to expand towards those 80% or 70% mark. So just looking at, very quickly at a quarter, what is reported without understanding what goes into creating those gross profits, you are missing the mark of where the gross profits are going to be in the future, which is exactly what matters. Voxtur has debt and had some issues in the past with covenants. So recently it reported a third quarter, but when it reported a second quarter, there was a lot of noise around the fact that in the notes to the financials, or in the explanations of the financials, the company was in violations of its covenants because it had 30 million something of debt, on a $500 million market cap, which is not a big deal, but they were not in compliance with one of the covenants, and some people were saying that it was alarming. And now, when this Jim was asked about the covenants, he said that they're not a problem because the bank already adjusted them. And you see, when you look at the most recent third quarter and you look for the covenants, there is no mention of covenants being not in compliance. And when you look at the balance sheet, you see that from Q2 to Q3, the 21 million or 20 something million of debt was moved from the current liabilities to long-term liabilities because the covenant issue was fixed. And you see, this is another way, another reason why you have to think and you have to ask questions instead of jumping to conclusions right away. So in Q2, when you looked at the balance sheet and you looked at it, you were like, they are not in compliance with the covenants. But then when you unpeel the onion and ask the right questions, you would realize that it was not an issue because the bank is a partner. The Bank of Montreal, which is who the debt is with, holds the debt, but it's also an equity partner with Voxtur. So they know that Voxtur is growing fast, and Voxtur has enough money in the bank that they could pay off this entire loan with no problem. But then they would go to the bank and they say, yes, we can pay it off completely, but that's going to impact our growth. Is this what you want? No, of course the bank said, no, it's no problem. Keep the money in the bank. Keep doing what you're doing. You're going to make us more money on the equity side, and we will just adjust the covenants. But it just shows you that when you read something, there's humans behind it, there's parties behind it, and there's more to the story than just panicking over what was said in the Q2. And Q3 is obviously clearly shows that that issue was resolved, and there was really no reason that people needed to panic a few months ago. Related party transactions. When you read through the company's financials, you will notice that there are two related party transactions. And for some people, they don't want to touch it because of some related party transactions. So I'm not going to say too much about it right now. I will just use a clip from when I interviewed Jim Albertelli, and he was talking about related party transactions. As you are a young company, you still have some related party transactions that don't look great on paper.
You talk about related party transactions. The related party transactions can be good or bad, right? In our situation, some of that related party transaction is extremely beneficial for Voxtur, the technology company. To the extent that I still own a law firm out there, well, guess what? It runs on Voxtur technology, and it has an over 80% margin on the fees it pays Voxtur home office. Voxtur technology makes the law firm more efficient and effective. It can serve more financial institutions. Those can grow together. So that type of thing. Or you might look at Gary with the tax service, where he has some royalties that are owed outside the company to a consulting firm that he used to own. He doesn't own it anymore. But that transaction too, that consulting work has created such value that it's demanded our technology. So depending on how we're the dog, we wag the tail of the related party, not vice versa. We actually allow those companies to be more successful, and then those companies are little incubators. I call them like mini laboratories that let us see where our technology needs to go next, and we can sell that to lots of other parties. There's no exclusive to provide, RPTA to a company Gary used to own. There's no exclusive for us to provide our default solutions to a law or to any other law firm. We can sell them to everybody, but those companies give us valuable insight. So again, I think people, when they hear, related party, there must be something nefarious about it. No, quite frankly, you have legal entities that can only be owned by lawyers, but are using technology that's a technology company. That's great, and technology makes those companies can be more efficient, which actually can reduce the cost of financial institutions, which ultimately becomes another benefit without any of the liability benefit to Voxtur, the technology company. So that's kind of how that ecosystem works.
Gary Yeoman, who is the chairman of Voxtur, his claim to fame, or one of his successes, was that he built Altus Group, which is a multi-billion-dollar company, from scratch from his garage. And he built Altus Group pretty much the same way he's building Voxtur, through strategic and synergistic acquisitions. Now, some people pointed out, again, without doing much research, some people pointed out by researching Gary that he left Altus Group in a particular time. And after he left Altus Group, that's when the stock price of Altus Group took off like 10x. And pointed out that he doesn't really deserve the success because it's the CEO that came after him made Altus Group successful. Now, that's again misleading, because if you look through the history of Altus Group and you look at the number of acquisitions that were done by Altus Group, it was about 25 of them or 26. 25 of them were done when Gary was part of the company. And then he left, and then the stock price took off. So now I'm asking you, who built Altus Group? The person who put together the acquisitions, or the person that came in and took credit after the acquisitions were done? So I think you know the answer to this question. But again, when you have an issue, look into it and you will find the right answer. In summary, these are some of the risks and issues that I've heard from people over the months, over the quarters that I've been involved with Voxtur. So I wanted to bring them on right away, talk about them, tell you the thinking behind them. Again, you don't have to agree with them. If those issues and risks are too big for you, just stay on the sideline and don't get involved. But just keep one thing in mind. If something is offering you an opportunity of life-changing returns, 10x, 40x, whatever it is, do you think it's going to have no hair? I think you know the answer to this. Thanks for watching.